Did you know that in the US, the average renter has a net worth of just $10,400, while homeowners sit at a staggering $400,000 of net worth? That's 40 times more wealth. If you're tired of throwing money away on rent and ready to make a real change, stick around. I'm breaking down exactly why homeownership matters, and I'm giving you 8 actionable steps to help you finally go from renting to owning. Let me start by saying this. If you are a die-hard renter and you are not convinced that this is the market for you to purchase, or you think no one should be buying real estate right now, then I won't waste your time and I'll tell you flat out that this video is not for you.
Not for you.
I'm not here to convince you otherwise, but there's plenty of you viewers who clicked on this video because you truly want a chance to buy a home, a condo, a townhome, anything. Now, why does it matter that homeowners have a net worth of 40 times that of renters? Because it highlights a simple but powerful truth. Renting may give you a roof over your head, but it rarely builds wealth. Renting can feel simpler and more flexible. You pay your monthly rent, avoid maintenance headaches, and move when your lease is up. Your obligations don't go any further than paying the rent due at the end of the month. But renting also comes with significant challenges. I think it's important that you consider this. Over the past decade, rents have surged, especially in major cities. In places like New York and San Francisco, the average rent for a one-bedroom apartment has surpassed $3,000 a month. Even in smaller cities and suburbs, renters faced annual increases that outpace wage growth, leaving many struggling to keep up. Every rent hike makes it harder to save for a down payment, creating a cycle where homeownership seems further away. Yes, in most all of the US, it is definitely cheaper renting than owning right now. But remember, this is a cycle, and before you know it, renting once again will be even more expensive and you're right back where you started. Renting also offers no financial return. Each month, you're putting thousands and thousands of dollars into your landlord's pocket. On the other hand, homeowners build equity with every mortgage payment and benefit from property value appreciating over time. When you rent, you're at the mercy of landlords and lease renewals. Your rent could spike, or you could be forced to move with little warning. Renting might offer flexibility, but it often lacks stability. And let's also be very honest. For millions of renters, the dream of owning a home feels simply out of reach. Rising interest rates, student debt, not so great credit, and average salaries all eat up at the possibilities of saving for a down payment and closing costs. Yet, despite these hurdles, the path to homeownership is worth exploring for lots of reasons, including your long-term financial security. For homeowners, equity, the difference between a home's value and what's owed on the mortgage, accounts for about half their net worth. Historically, property value rises and seldom decreases. In addition to their homes, research finds that homeowners often own additional appreciating assets like stocks or retirement accounts. This diversity in asset ownership provides homeowners with more financial stability and opportunities for upward mobility. Renters, this is what you lack when you rent. Here's why homeownership is so impactful. Homes are often the largest asset passed down, creating a financial safety net for future generations. Increasing access to homeownership is one of the few proven ways to reduce wealth disparities over time. Real estate consistently appreciates over time, even in high-interest environments like we're living in right now. Rent payments may seem more manageable in the short term, but they offer no return on investment. In contrast, every mortgage payment builds equity, like we've said before. Over time, the value of the home itself may increase, offsetting the initial high costs. Homeownership also provides stability. As a homeowner, you're no longer at the mercy of unpredictable rent hikes or lease renewals. You have control over your living situation, allowing for better financial planning and personal freedom. For homeowners, equity offers a foundation for financial stability and broader goals like funding education, starting a business, or weathering financial storms when they come. They can later on access their home equity for renovations or an emergency. They have a home to give them access to that equity. Renters, on the other hand, often struggle to build the financial cushion needed to handle life's uncertainties. I get it. You're thinking, Wanda, it's not that I don't want to buy a house. It's that I can't. my income isn't enough, my credit needs work, or I can't do it alone. And I hear you loud and clear. But here's the truth. If you want to be in a better position to purchase, you'll need to take real, intentional steps to get there. It might mean working harder, saving more, or cutting back on vacations, but progress requires effort. The key is to focus on your goal of owning a home and take it one step at a time. Even small, consistent actions can make a big difference. This video has 8 actionable tips that you can absolutely tackle. To give yourself the best chance, you might need to apply all of them, but start with one and keep building momentum. I've also created a one-page downloadable resource to guide you. Grab it through the link below. And for each tip I share, I'll give you a specific action step to take. Let's start creating that path. Good credit is key to securing a mortgage with favorable terms. Pay bills on time, keep credit utilization below 30%, and avoid unnecessary credit inquiries. Check your credit report annually at annualcreditreport.com to dispute errors. Many banks, like Capital One, for example, also offer free credit checks. A strong credit score not only helps you to qualify for a mortgage, but also saves you thousands in interest over the loan term. Number 2, automate your savings. Simplify saving for a down payment by setting up automatic transfers to a high-yield savings account. Start small. $50 a week adds up to $2,600 in a year. Consider using accounts with higher interest rates again, or tools that round up purchasing to boost savings. Number 3, start living like a homeowner. Practice managing homeownership costs now by saving the difference between your rent and a future mortgage payment. If your estimated mortgage is $2,000 and your rent is $1,500, save the $500 difference monthly. This helps you prepare for expenses like taxes, insurance, and repairs while building a cushion for unexpected costs. Number 4, learn about down payment options. You don't need 20% down to buy a home. Options like FHA, VA, and USDA loans allow lower down payments and have flexible credit requirements. Speak with a mortgage lender to explore your options. Even if you're not ready to buy now, understanding available programs helps you create a tailored plan to qualify later. Number 5, look for hidden expenses in your budget. Unused subscriptions, frequent takeout, and high utility bills can quietly drain your budget. Negotiate better rates on bills and cook at home more often. Redirect those savings to your down payment fund for faster progress. Number 6, be realistic about your first home. Your first home doesn't have to be your dream home. Focus on getting started, building equity, and gaining stability. Consider condos, townhomes, or homes outside city centers to maximize affordability. Prioritize needs over wants and think long-term. This first step paves the way for future opportunities. Number 7, partner up. If you can't qualify alone, consider buying with a trusted family member or a friend. Combining incomes makes homeownership more achievable. Draft legal agreements to protect everyone involved. This partnership approach lets you start building equity now rather than waiting for ideal conditions. Number 8, don't wait for perfect timing. Waiting for interest rates or housing prices to drop could mean missing out on current opportunities. Perfect timing is rare, even for the most experienced investors. Focus on what you can afford today. Today you can speak to a lender. Today you can start saving. Today you can have a conversation with a family member to partner up in the future to purchase. Today you can start working on your credit. Speak with a lender to assess your options and consider refinancing later if rates improve. Every step you take now builds equity and secures your financial future. So there you have it, 8 practical tips to help you move from renting to owning and start building wealth for your future. Remember, it's not about perfection, it's about progress. Taking small, consistent steps today can lead to incredible opportunities tomorrow. Don't forget to download the free cheat sheet I created for you on those 8 tips and actions you can start implementing today. As always, if you have any questions, shoot me an email and I'll be happy to talk to you about anything real estate. One more thing. For some, purchasing is just not possible for whatever valid reason. And I'll be the first one to tell you that fear of missing out is definitely not the reason you should purchase a home and potentially get yourself into financial trouble. Know that if you've already tried to purchase and you just can't make it work, then renting may be your only choice. Don't be discouraged by that. Maybe homeownership is not possible now, but do try to revisit the possibilities in the future. If you found this video helpful, give it a thumbs up and subscribe to the channel for more actionable advice to homeownership, real estate, and building financial stability. And don't forget to hit that notification bell so you never miss an update. Thanks for watching, and I'll see you on the next video.